Hello and welcome to Ask You for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. The last day of trading for June in the books, and markets ended on a high note with the S&P rising to another record close. Stock climbed again, and most major indices ended the day in the green as investors kept a watchful eye for progress in trade deal news from the White House. And speaking of trade deals, we're taking an in-depth look at what investors need to know when it comes to policies with China. Tariff conversations seem to change moment to moment, but we're separating fact from fiction and what you can expect going forward between the U.S. and China. And Circle is rolling into the gaze of analysts. Shares have surged nearly 500% above Circle's recent blockbuster IPO, and investors have taken notice of this full circle moment. We're talking with an expert to give you everything you need to know. Well, trade negotiations are front and center, and Wall Street is waiting patiently for a potential deal between the U.S. and China. For more, we're now going to bring in Bill Reinsch, Senior Advisor and Scholar Chair Emeritus of the Economics Program and Scholar Chair in International Business at the Center for Strategic and International Studies. Bill, it is good to see you. So I think what investors want to know, Bill, is bottom line, is there going to be a big, comprehensive trade deal getting done between the U.S. and China? Not a trade truce or not a trade handshake, Bill, but a real deal. What do you think?
Unlikely, although I think Trump will call it that. I think what we're seeing out of these negotiations is that for him, the squeeze is more important than the juice. It's important for him to be perceived as winning, to wave the document and say, we got this great deal. There's no text often until later, so it's very hard to analyze it. In the Chinese case, there's still no text from the agreement that they made a couple of weeks ago. And I think that one is best characterized as kind of a ceasefire, not as the big thing that you're talking about. I think Trump would like to meet with Xi Jinping and do what you say, negotiate a big deal. The Chinese approach is to not want to do that until all the details are settled in advance. And that's going to be very difficult.
Who has the leverage, Bill, the U.S. or China?
Well, that's a good question. I think what we're learning is both have it. I think Trump's view going in was that we did because their economy was in trouble. And if we started to cut off their access to our market through tariffs, it would be in more trouble and they'd fold. I think what we've discovered, particularly in this most recent round of talks, is that they've got leverage too, thanks to minerals, rare earths, magnets, industrial magnets. They've got stuff that we don't have and that we need. And they've discovered ways to use that and hold it over us. So I think both sides have leverage, which means that in the end, if there's going to be an agreement, it's going to be one with mutual concessions on both sides and not a one-sided deal.
Do you think some economists, Bill, I'm just curious to get your take on this, the question being, how much trouble do Trump's tariffs cause for Xi? And I know there are economists who say, listen, they are destabilizing China's economy. They are making it tough for Xi. They're complicating his efforts and ability to stimulate that economy, to hit that 5% real GDP target growth. What do you make of that?
Well, I think it's causing him some problems. Just like the export controls they imposed on us, on minerals and things, are causing us problems. I think in both cases it's inconvenient, but not fatal. It's not. She doesn't have elections to worry about, and they can manage the economy more or less successfully without having to worry as much about public opinion as we normally do in the United States. And they can, they can throw money at problems. They're not short of money. And they're, I think, better than us, have a long-term plan to match us technologically, which they're implementing. So I wouldn't say we've made their life more difficult. There's no question about that. But I don't think they're fatally compromised.
Bill, Trump has also been talking about TikTok. Says he has identified a buyer for the U.S. operations of TikTok. Didn't name a bidder, but told Fox News, we have a buyer for TikTok. I think I'll need probably China approval, he said. And I think President Xi will probably do it. How, if at all, Bill, do you think TikTok plays into these negotiations?
I think it's more a political card, frankly, than it is an economic card. I mean, the problem in the United States is it's an enormously popular platform, particularly with the younger generation, particularly with a lot of people that voted for Trump. And I think there's a reluctance to ultimately to do what the law tells him to do, which is to ban it. So he's trying to find a way out of it. I think the Chinese, as a result of that, realize it's a card they can play. You're right that they're going to have to approve any deal, and they will probably make that very difficult and use it to squeeze us on some other areas.
Where do you think, Bill, I don't know, to the extent you have forecasts on this, I'm just curious where tariffs you think could end up at the end of the day with China? I mean, we got sectoral tariffs, you got reciprocal tariffs, thoughts there?
Well, yeah, the wild card is these sectoral ones that are not done yet. They're subject to U.S. investigations. So they've done steel, aluminum, and cars, but we've got commercial aircraft, pharmaceuticals, semiconductors, trucks, commercial aircraft. So there's a bunch of them out there. And in a lot of these negotiations, including the one with China, the other countries are asking, well, wait a minute, if we make a deal with you now on the April 2nd tariffs, are you going to come back 2 weeks from now and say, oh, well, we're also going to put in tariffs on chips, on aircraft and pharma and stuff like that? And for China, which is a major pharmaceutical exporter and a major semiconductor exporter, that's a big deal. And I think they're going to want answers on that before they make any kind of serious deal with the United States on other matters. Where we end up, my guess is not very far away from where we are now, which is China at 10% and us at, it's a little fuzzy, around 55. That's composed of 20% on fentanyl, 10% on the baseline that he's charging everybody, and then another 25 for the tariffs that are left over from his first term and the ones that Biden imposed. I can see the U.S. taking that down a bit if there's a bigger deal. I can see him taking down the fentanyl tariffs. I don't think the 10% is going to go away. They seem to be wanting to apply that to everybody. So we don't end up with equivalent amounts. I don't see right now that they're going to get bigger, but there will be more drama. There's no question about this. There will be more drama. We'll accuse the Chinese of slow rolling the minerals, and Trump will make more threats. There will be more meetings, but I think it all comes out not very far away from where it is now.
We could probably also count on, Bill, on a few more social media posts, likely. Final question, Bill.
Say the least.
Right. So Trump comes, I'm just curious, Trump comes to you and he asks for your advice, Bill. And you were president of the National Foreign Trade Council for a long time. Let's say he asked you for advice and guidance, Bill. He says, Bill, how do I get a deal done here? What would you tell him?
Well, first of all, it's very unlikely you'd ask somebody like me for advice. But that said, I think I'd tell him that, they're a big economy. They're hard to push around. The lesson of the last month should be that they're hard to push around. You need to be thinking, what's in our mutual interests? Where are there areas that we can cooperate? What do we need? But also, what can we give them? And you need to be thinking, rethinking your approach on technology, because that's where a lot of this is going to settle. They're holding back stuff we need to make high-tech products in the United States, including chips. We're holding back the technology that we have that enables them to make more advanced chips. And there's good national security arguments on both sides for both countries. It would be awfully useful, I think, if we could get over that hump and figure out a way in which we could meet each other's needs without endangering our security. I think there are ways to do that. There's a lot of paranoia right now in both countries. The assumption is, we're out to do each other in. And so therefore, we shouldn't give each other anything. If we can find a way to get past that, then I think there's a deal out there that would be mutually beneficial.
Bill, always good to see you, to have you on the show. Thank you, sir.
Thank you. Bye-bye.
The S&P 500 and the NASDAQ jumping to fresh records, closing off a volatile first half of the year. Let's get to Yahoo Finance's Allie Canal with the market takeaways. Allie.
Volatile it was, Josh. I mean, we had fresh records for the S&P and the NASDAQ, but we have the dollar at the lowest level since the 1970s. So there's a lot of winners, a lot of losers in this market. So let's talk on an individual stock basis. So these are your winners here, and it's an interesting list. Palantir up 80%, Super Microcomputer up 60%, NRG Energy also up 80%, and a lot of these are AI plays, or they're connected to the AI world. NRG Energy, they are looking at the grid, the power that you need to house a lot of these data centers. Palantir has become the favorite AI play on the street. Super Microcomputer, that was a heavily shorted stock, especially earlier this spring, actually the most heavily shorted stock for the month of April, but still ending up over 60% here. And Palantir, I mean, remember when it was a meme stock back in the day? And now it's one of the top spots on Wall Street. And then if we look at some of the losers here, Deckers, Lululemon, if you're a retail brand, you have exposure to China, you're dealing with the consumer, we're going to see a bit of that choppiness. Enphase Energy, renewable energy play, and obviously with Trump's tax credits, getting rid of those EV tax credits and other policy rules and guidelines coming from that administration, those types of companies are struggling. Then United Health Group, I mean, this is a company that's dealt with a lot of lawsuits, the death of one of its executives. So these are your losers here, but just an interesting group here as we look across the board.
Yeah, one big trend has been the momentum trade, right?
Yeah, FOMO chasing.
Right, I mean, exactly. It's people saying, listen, I'm going to stick with my winners because I expect them to stay winners, right?
Right, and to that point, I want to take a look at some narrow leadership that we're seeing here. So this is a breath check. You have your equal weighted S&P versus your cap weighted. So your equal weight is this green line right here, and you can see that there is a bit of dispersion there between the two, which suggests that leadership is narrow. Now, that being said, a lot of strategists who I've been speaking with have said that, breadth-wise, we're in an okay place. It's not just all concentrated in tech. So on a sector basis, we're seeing industrials lead the way higher, communication services, financials have done very well too. But on a company by company level, we're still seeing those high quality mega cap stocks outperform here. The Russell 2000, that's just been struggling for a bit now. So we still have this divide. To gain full confidence in this rally, for it not to be as fragile, I think we'd want to see these two lines come a bit closer together. But still, all things considered here, we're not in a terrible place at this point. And then finally, to cut or not to cut? That is the question for the Federal Reserve here. And the odds of a September rate cut, above 70. July rate cut, we've been pretty much in this range bound 20 to 25% odds here. I will say if we get a rate cut in July, I think it's going to be because of bad news. It will be because that labor market report that we're seeing on Thursday comes in worse than expected. I'm not sure how much that would actually help the rally at this point. Of course, markets want rate cuts, but it always depends on why you're cutting, right, Josh? And if we're not cutting for good news, what does that say about the economic picture and what we could see moving forward?
Yeah, last time we heard from Jay Powell, he indicated he was very comfortable just sitting on his hands.
Yeah.
Tariff inflation, wants to see how that plays out, who picks up the bill, just a lot to suss out there. Didn't make the president happy when he said that, obviously, and the president has kept really going after the Fed and Powell.
For 1%.
Today was back at it again,
Yep.
but Powell hanging tough there.
Yeah, and Powell's been pretty good about telegraphing where he thinks the Fed's next move is going to be, and to your point, he's pretty much stayed even keel, saying that we are in a position to wait. We can wait for more data and see what comes out of it.
All right, thank you, Allie. Appreciate it. Stick around. Much more As for Trends still to come. Circle shares have surged nearly 500% above their recent blockbuster IPO price on June 5th, fueled by the Senate's passage of the Genius Act, regulatory framework for stablecoins. Financial services companies in focus today after a slew of analysts initiated coverage on Circle. And joining me now is Owen Lau, Oppenheimer Executive Director and Senior Analyst, who has a market perform rating on Circle and says to expect total stablecoin market cap to grow to 1.6 trillion in 2025. Owen, it's good to see you. So let's talk about Circle. It has enjoyed a wild ride here, Owen. You initiate with the equivalent of a hold rating, Owen, on this name. Why the perform rating, Owen? Walk us through it.
Sure. So first of all, thank you for having me. We have a very favorable view on Circle's fundamentals and also outlook. The key reason why we have a perform rating is because the stock actually went from $31 IPO price to over $180 within 4 weeks. I haven't seen anything like that before, and that's why we want to be a little bit cautious on the shares at this point. And we see some catalysts coming that could present a better entry point, a better opportunity for investors. So that's why we have a perform rating.
So when you say, Owen, there may be a better entry point for investors, can you spell that out for us? What are some events coming up that might provide such an opportunity?
Yeah, so first of all, it's the Genius Act. We saw the stock and also even Coinbase had a huge run up after the passage of the Genius Act. In my view, there may be some, like a lot of good news baked into the stock. And now the market expect President Trump will sign the Genius Act by August. So there may be some selling the news, like buy the rumor, sell the news situation coming up. The second one is the earnings, right? So when people try to do more homework on Circle, and when they look at the earnings result, they may have a second view about, they have to share 50% of the revenue with Coinbase. So maybe some investors may step back a little bit and say, hey, you know what, maybe we should wait for a little bit because of the valuation right now.
How big, Owen, is the TAM, the total addressable market for stablecoins? And how fast, Owen, is it growing?
Yeah, the TAM is like huge. So that's why we have a very positive view on this one. If you look at the total market cap for global stablecoin right now, it's about $260 billion. We estimated that by 2035, it can go up to $1.6 trillion. And if you look at, so that's the total market cap of stablecoin. If you look at the Circle, if you look at stablecoin revenue opportunity, we believe there's an additional $2.1 trillion incremental revenue can go to stablecoin. That includes consumer payments, capital markets, and also AI agents. So those are the key areas that stablecoin can potentially disrupt these areas.
Owen, what about for Circle, the role of competition here and new entrants? You know, Amazon, Walmart reportedly considering their own stable coins. How should investors think about that dynamic and what it means for Circle going forward?
Yeah, the analogy we keep telling investors is think about credit card. You have a private label credit card. You also have a general purpose credit card. So for Amazon, for Walmart, they may create their own so-called private label stablecoin because they can offer that to their more loyal customers. But the limitation is these customers can use the stablecoin within Amazon and Walmart ecosystem. But I think there are lots of investors, lots of customers would like general purpose stablecoin, in which they can use this stablecoin across multiple ecosystems, not just Walmart, not just Amazon, but across like different banks, different retailers, and different internet and online merchants. So to me, in the future, there will be two markets, and these two markets coexist, which is the private label stablecoin and also a general purpose stablecoin. I don't think there's any contradiction here. I think these two markets can coexist.
Final question, Owen. You know, so to initiate here with the equivalent of a hold rating, as you noted, valuation you think is a concern. What are the upside risks to that call, Owen?
Yeah, I think there's still lots of enthusiasm of buying Circle. There are lots of potential disruption coming into the Circle, and they may even beat the earnings estimate in the upcoming earnings release. So those are kind of the upside opportunity or upside risk my call has. But again, if you look at the stock, it has been pretty volatile. So again, like we stick with our call, wait for the better entry point. I think there will be some catalyst coming up.
And finally, Owen, just real quickly, this headline, I want to get your quick take on that. Circle, I'm reading this is a report per Reuters, applying to create a national trust bank in the U.S. What do you make of that as a financial analyst covering the name?
Yeah, I think there are two key things that Circle can do if they are successful. The first one, they can become the custodian for many other digital assets. The second one is they can also manage or oversee the management of the USDC reserves. So those two things, number one, can expand their revenue opportunity. Number two, they can even bring some of these services back to their own Circle or USDC ecosystem. It will be better for them to manage their own destiny. So I think those are the motivation why they want to apply these license.
Owen, great to have you on the show today. Thanks so much for joining us.
Thanks a lot.
Time now for what to watch Tuesday, July 1st. We're going to start off on the earnings front. Constellation Brands announcing results for the first quarter after the markets close on Tuesday. Analysts expecting the company to report weak results for Q1 with beer sales volume dropping 3%. Taking a look at the labor force, the monthly job openings and labor turnover survey for May is coming out on Tuesday. Economists forecasting job openings to decline slightly to 7.3 million in May. The data suggesting a modest softening in the U.S. labor market, but still hovering at a historically elevated rate. And shifting gears, we're going to be getting Ward's total auto sales numbers for June on Tuesday. That number expected to decline compared to May to 15.35 million on an annualized basis. And finally, we're going to be tracking the latest with President Trump's tax bill. Republicans are holding a narrow 53 to 47 majority in the Senate, but opposition of certain portions of the bill still remains among multiple Republican senators.